All right, let's go through the statement of cash flows. The first section is the operating activities section, and this for the most current year they have received $239,256,000 of cash by operating their business. That basically means that they've collected 239,256,000 more from its customers than it had to pay out in operating its business. Now, I've not included the activity because American Eagle, as many companies, use a method called the indirect method, and it's hard to read. So what is easier is what they call the direct method, and that would start out with cash collected from customers and show you that amount, and then it would say cash paid for rent or cash paid for insurance, all these other operating activities. So that's the amount that they got from operating their business in cash. And investing activities, that'll explain what happened, or whether they purchased long-term assets or investments or sold any. So let's look at what we have here. They this is cash going out, so they credited cash for 100 million plus to buy property and equipment. So they had debited property and equipment and credited cash during the period. They also bought some intangible assets. Those are things like goodwill, trademarks, copyrights, franchises, etc. They also bought, and this is basically like buying stock in another company, and they sold stock in another company, stock or bonds. So this is basically what they're doing, is they're crediting cash. What they debited is an investment, which is an asset. Here they sold it, so they debit cash and they credit the investment. They'd also debit or credit a gain or a loss depending on whether they were able to sell it for more than what they bought it or less than what they bought it for. So changes in long-term assets and investments in other businesses. Financing activities. This is basically borrowings from creditors and any transactions with your shareholders. So here they a capital lease, I don't want to get into that, but basically it's they've paid to have use of property. In the prior year they repaid some of their note payables, so they had debited notes payable and credited cash. Here they repurchased their own stock, so they had debited treasury stock and credit cash. Stock options, I briefly explained those. It's basically where people who hold stock options can turn them in for actual stock, and so they had to pay for that, so they got cash for that and they gave stock. This is beyond the scope of the course, but you can see they got some more cash. Now here's a big cash payment. That's for dividends. And again, it's financing is any cash from, say, issuing stock or buying it back, and payment of dividends. So what you then have is you're going to take your operating plus your investing plus your financing minus any exchange rate changes. I'll explain that in a second. But O plus I plus F, operating plus investing plus financing, will equal the change. So during the year, their cash went up by $51,952,000. Add that to your beginning cash, which you get from your balance sheet, and that'll give you your new ending balance, and that'll also be on the balance sheet. This exchange basically represents, if you have, like American Eagle, stores in foreign countries, you have currencies in foreign countries, and so you have exchange rate issues, fluctuation of the value of the dollar. Again, beyond the scope of the course, as is this discontinued operations. Okay, so in summary, O plus I plus F equals your change in cash. Add your beginning cash and you've got your ending cash.